takes courage to get you outside of the box. It takes courage to be successful. It takes courage to win. People don't talk about people that don't win. If you win, they're going to talk about you. Do you have the courage?
What's up, everyone? I hope you're having a fantastic day. Well, from today's title, you already know that this one is going to be an interesting one. Do you know how many XRPs you'll need to become a millionaire? Well, this is achievable for everyone in the XRP army. So another thing we will talk about is when we are likely to get there. Now, before we go any further, we all know that XRP has gone to $3.84 in the past. This is the previous all-time high that we are currently working with. Overall, we know that when the market starts moving, it moves pretty fast. So I need all of you to stay ready. Otherwise, you're going to get left behind. As always, welcome back to Money Side, your favorite crypto news channel. If you're new here, welcome to the XRP Army. Hit that subscribe button and turn on notifications so you don't miss out on our daily crypto news updates. Back to today's video, let's talk about the high-end partnerships that Ripple has been able to form over the last couple of years. To start with, Ripple has partnered with Accenture since 2015, and this partnership is still ongoing. Rob Palatnik is the Managing Director and Global Head of Technology Research and Innovation, DTCC. On top of that, he looks over distributed ledger technology advancements. The reason why I'm sharing this with you is because Ripple and DTCC has had ties for a very long time as well. We have a very interesting picture I'd like you to look at. Here we can all see the up-to-date individuals who have been working with Ripple Labs as of 2018. You can see Rob Palatnik as well as Brad Garlinghouse here. And what I'll say is that from what I can see, Ripple and XRP are just setting up to have complete dominance over the crypto world. Back in 2015, Donald Donahue was named as an advisor by Ripple. Now, who's this guy? He was the former CEO of DTTC, and he is said to bring deep financial services infrastructure technology and security expertise to Ripple Labs. Now keep in mind, this all happened in 2015. We have so many more partners who have jumped on board since. We have Rosie Rios and a dozen more elite individuals that have worked at high-end entities like DTCC that are coming on board. We even have a couple of executives from Swift who have jumped ship. Now, why do you think all this was happening? My best guess is that they all know Ripple is the future. The time is coming for Ripple and XRP, and with such a strong team behind it, that means a lot. There's no way so many elites could be joining the team if they didn't know what awaits us ahead. And if that's not enough, Ripple has a ton of other beneficial features that their Ripple Labs bring to the table. That's why so many banks worldwide are eyeing a partnership with Ripple. This company has ideally made itself lucrative to the financial institutions by ensuring they cater to all the needs of the financial world. Truly, every partner that Ripple has is currently enjoying so many benefits you wouldn't believe it. You guys are completely brainwashed if you can't see the tremendous benefits that Ripple offers its clients and the good it will do once the SEC case is over for the overall crypto market. Cross-border payments are revolutionizing the crypto and fiat space, where companies get settlements within seconds and not days. There's no more need to wait for days to send money to your relatives or friends in different countries. Through RippleNet, these transactions can be settled almost instantaneously. Crypto liquidity is another powerful feature of RippleNet that's worth every penny. The RippleNet framework draws its power from XRP, which is an equally powerful crypto with a massive following. Before the SEC, XRP was the third largest crypto and only dropped when the case was filed. Very soon, Ripple and XRP will be providing liquidity for the whole crypto sector, and that's going to be valued at tens of trillions of dollars. Once that happens, no one will stop this crypto from ruling the whole crypto space for sure. Central bank digital currencies, CBDCs, another innovative feature of Ripple Labs. They offer secure blockchain innovation for a sustainable economy, so you can imagine how prepared this platform is for the future of the crypto space. We all know CBDCs are going to take over as the next wave of stable cryptos of the whole world. In a literal sense, with CBDCs, there won't be any need for stable coins in the first place. I mean, take a look at Tether. It's been coupled with so many issues in the crypto space now that no one wants to store their currencies in Tether. These stable coins provided the perfect transition from fiat to crypto. But now with CBDCs, they won't be required again. Everyone will move to CBDCs. And guess which crypto will be at the middle of all that? XRP, duh! That means this crypto will soon be the highlight of the day. And when that happens, expect the price of XRP to shoot through the roof. First forward today, DTCC is working on a project that will support digital U.S. currency in the clearing and settlement process as a part of the Digital Dollar Project effort. Guys, you need to open your eyes. This is just a front for what is actually happening behind the scenes. DTCC is in partnership with Ripple, but since Ripple has issues with the SEC, they can't disclose it. Now, imagine what will happen to the value of XRP once that everyone knows their team is working on the digital dollar. That's why I keep insisting only 2,832 XRPs are enough to turn you into a millionaire in this day and age. This is also another headline that should put everything into perspective. This was before the SEC case. Do you think they ever called it quits? I think not. They are just waiting for things to settle down and XRP will blow up, turning XRP owners into millionaires within minutes. Guys, what a week. Assets across the board got smoked, and the NASDAQ officially ended the week in bear market territory. That's after one day of record gains. For crypto traders, Bitcoin, Ethereum, XRP, and some other crypto assets have been cut in half or more, despite the Standard & Poor's 500 being down by only 13 to 14% from highs. Only 25% of all listed stocks are above their 200-day moving average. It's safe to say that after the massive bull run in nearly everything that we've seen over the last couple of years, we are now officially in a bear market. Because this may be the first bear market experience by many in our community, we thought it would be helpful to put out a little guide of key things to remember about bear markets that'll help you navigate this new market regime. Let's jump in. 1. Volatility makes your positions feel bigger in PL terms. Bear markets typically bring about more volatility in asset prices than bull markets. Over the last 20 days, we've seen an average daily move in the indices of about 3%, which is much larger than the rolling 20-day average in 2021 of about 0.9%. With the same amount of capital, this pickup in average range means that in dollar terms, your PL moves have likely gotten much bigger than normal. In March 2020, the average daily range in the S&P 500 was over 5%. This is important to remember because PL can have a huge impact on trader psychology. Lots of professional money managers and hedge funds control for this factor, reducing exposure to keep daily portfolio volatility close to their target. Some funds are mandated to do this. While you're free to do what you like in following your trading plan, this is a key expectation to hold. Expect bigger moves than normal. 2. The average bear market lasts about 2 years. The 2-year number mostly refers to how long the average stock bear market lasts. So far in crypto, the average bear market has lasted about 9 months. For comparison, in stocks, the average bull market lasts more than 6 years. So while bear markets tend to be much quicker than periods of growth in equities, they also tend to be much more memorable. Recently, bear markets have been getting shorter and shorter. The last bear market in 2020 lasted barely a few months. Some attribute this to the Fed stepping in more and more, while others often claim that the better communications infrastructure we now enjoy in the 21st century is allowing information to be priced in much faster. While the trend is certainly towards shorter and shorter bear markets, they can still oftentimes last much longer than one expects. Adjust expectations accordingly. 3. Cash is a position. While US dollar inflation is currently high, running about 7 to 10% depending on which numbers you're looking at, the buying power of $1 US doesn't actually change that much day to day. The buying power of one share of SPY changes much more rapidly per day, and recently it's been losing buying power a lot quicker. The most important thing to remember for bear markets is that staying alive is the most important thing. As long as you don't blow up, you can live to fight another day. Fleeing poorly performing assets for cash is an option. This has been happening recently. If you look at major asset classes, people seem to be fleeing to cash. Bonds, stocks, gold, crypto, it's all getting sold for cash in a risk-off environment. Typically, conservative players will rotate from risk assets like stocks into safer stuff like treasury bonds, T-bills. That said, with the Fed hiking and inflation running high, it seems that people are skipping the 3% yield they can get in a bond in favor of the total flexibility you get with cash. Another option for hedging is to sell short assets you think will underperform or buy puts on your portfolio if available. You can directly see the price of sleeping well in the options market. 4. Bottom picking is hard. While it's our job as traders to find opportunities that have a positive expected value, bottom picking has been historically very challenging. In the crash of 2020, many prominent hedge funds were underhedged going into the crash and overhedged coming out of it. Effectively, some of the smartest people in the world did a poor job of picking where the likely bottom was. Unless you have a very long-term strategy that allows for consistent deployment of capital over time, that's DCA. Trying to pick bottoms in downtrending markets can be a very low bat rate percentage strategy. Well, that's it. 4 things to remember for newbies to endure these bear markets. As we mentioned, the most important thing to do in a more difficult market is to stay alive. As always, do your own research and always trade safely, guys. We continue to pray for Ukraine. Please keep in mind, we're not a licensed financial advisor. All videos on this channel are intended for entertainment purposes only. You can let us know what you think in the comment section below. Thanks as always for watching. Don't forget to like this video and please click on that subscribe button. And be sure to turn on notifications. That way you get informed whenever we post our amazing content. Thanks again, and we'll see you on the next Money Side.